Good start. Hi everyone, welcome to the 12th of February meeting of the Scrutiny Committee. We'll start with apologies, if that's okay, Lucy.
We have apologies from Councillor Thompson, Chair.
Thanks very much. Any urgent business at all in the group? No, we're okay. Any declarations of interest? No, normally pretty good, thanks everyone. Okay, if I refer you to the minutes from our previous meeting, 8th of January, just for accuracy check and any matters arising, please. Can I say we're okay on that? Yep, yes. All good. Thank you very much. Okay, in that case, I'll just hand over to Sinead first to give us a heads up about the business coming up. Is that okay? Then we'll go back. Thank you.
Yeah, thank you, Chair. So just as a reminder that members of Scrutiny should really only be scrutinising the recommendations onto Council. Cabinet recommendations are obviously subject to call-ins, so if you can just make sure when you're focusing on the recommendations, it's the budget recommendations to Council.
Okay, that's really clear. Thanks very much. Right, with no further ado, I'll hand over to Councillor Elliott then to introduce 5A. Thank you.
Thank you very much indeed, Chair. I will just set the scene, I think, probably, and hand over to Rodney and Daniel to answer sort of questions. But I think the scene setting, as it's sort of laid out in the report, really refers to a flat cash settlement over the next 3 years. Our spending power is around 23 million. We have, despite the inflationary pressures, produced a balanced budget, which I think is important, and obviously the key factor around council tax is a recommended increase of £5 on band D. Now, there was a supplementary paper that came round which indicated some, what we would probably have to admit would be, or accept would be, an unusual change, in the sense that there was a big difference over the provisional settlement figure and the final settlement figure. That was because the government recalculated our historic business rates pooling gains, and that had the effect really of reducing the business rates element that government estimated that we needed from 9.757 million to 8.575 million. And of course that has an immediate effect on the budget, because the lower the amount of income the government thinks you need, then the less amount of grant that the government then expects you to need. So it had the effect of reducing our general grant by 812,000. Rodney can explain this in fine detail, but I'm just giving you the layman's version of this. So that meant that we saw a reduction in the first year of 812, which then went to 1.1 million in the following subsequent years. That effect was cushioned in the next year, in 2027, by a one-off grant of 812. So it basically balanced out that figure. And then we saw a modest increase of £6,000 just around grants for homelessness and rough sleeping and things like that. So that gave us the revised figures that were in the supplementary paper. I think probably I'll leave it there, if that's okay, Chair, because there may be some questions or a clarification that Rodney wants to give at this point, and then if you're happy, I'm happy to come back with further information if you need it.
That's really helpful. Thank you for that introduction. Rodney, are you okay to stop and start for questions, or go through the report and have questions and comments at the end?
However you'd like to take it, sort of thing. If you want to go through almost a page turn on the report for questions, or just take them ad hoc as you wish.
Okay, I'll leave it up to the team if they want to put their hands up. Okay, over to you, sir. Thanks very much.
Well, I wasn't really going to say much on the report. The highlights, as I say, I think already been covered by Richard. The proposal for £5.
Get comfortable then, won't you?
Yes, get a £5 increase in the council tax to £180. It's already been mentioned about that funding settlement. Good news that we have got a 3-year funding settlement. The bad news, at the provisional settlement, it was a flat cash for the next 3 years, which would mean we'd have to assume any inflationary pressures. And as been mentioned in the addendum, it's actually got worse than that now, because actually we see that actually in 27, 28 and 28, 29, there's a potential £1 million reduction compared to the figures in this paper. So that is a significant change for 7, 8 and 8, 9. The paper also sets out the proposals for fees and charges, which is a cabinet decision, and also the special expenses decision. And as part of this report, I have to give advice to the cabinet and council on the robustness of the budgets, and indeed I'm happy to confirm that, in my opinion, these budgets are robust and the levels of reserves is adequate for our needs. So I've got no concerns about this budget proposal. I don't know if you want to go through the paper in a bit more detail or just on the questions.
I wouldn't mind a bit of detail, but is that the view of the committee? Yeah, I think so. If you don't mind, Ronnie, it's always helpful for us and people outside of the group as well.
So perhaps we take it through the part. Obviously, the budget is quite a complicated calculation. You've got various elements you need to put through it, and this paper tries to step you through this. So very much it tries to set on, very much starting in page 12, about looking at the cost of our services. So as part of setting the budget process, we go through with all budget managers to make sure that actually we've got the budgets that are necessary to deliver the services. And very much we've got a lot of detail, particularly in appendices, about what the breakdown of the budgets are and what some of the budget movements are. Do in the paper actually mention some specific issues, because these are some big important numbers in the papers. So for instance, on 2.5, we mentioned about LGR. So actually saying we're aware that potential LGR may happen, and therefore we have set aside in the budget £350,000 towards some of these costs next year. And you'll also be aware there's money in the reserve for LGR costs as well. So it's a start towards those costs, but it does clearly say that actually, if there is a decision, then actually we may need to come back and review that in light of how we'll fund the overall transition, which initial estimates is anything from 30 million to 50 million on a transition cost to new unitaries. So I think if people have got questions, just shout at that time. If not, I shall continue. Obviously, key issue for us is our staffing costs. So we're part of the national pay bargaining, so we don't actually have any influence on the level of pay increase that's agreed. But we've put an estimate in for 3.5% for 26-27, which we think is a reasonable estimate. The current year settlement was 3.2%, so 3.5% is I think a reasonable assumption. Probably worth saying that the claim that's gone in from Unionson and the other unions is 10%, but that was the same claim they put in last year as well, and we settled at 3.2%. So there is a risk there that it will be higher, but I think that's a reasonable assumption. Also mentioned about the community infrastructure levy. See, we get that, but we only keep a proportion of that for our admin fees, and that's very much in line with what we received in the current year, slightly up. Mentioned about joint working. Again, this is just a note, we're all aware of the joint working arrangements, and again, we continue to share costs where appropriate, 55-45, and of the areas like leisure where it's just South Norfolk that delivers the service, those costs are just to South Norfolk.
Sorry, can I please do? Yeah. Just a simple question about the 45-55 rate. I mean, that's obviously what was set when the one team was created. Does that ever get re-looked at? Is whether that's still an appropriate split?
Yes, we do occasionally look at that. I think the last time we looked at that was probably about 18 months ago, and it was still an appropriate level. There obviously, as with time's moved on, we are seeing a few more posts which is one authority or another authority, because there are actually different diverging political appetite for something like it's not the ditch walker, isn't there, actual name, but that role was something that actually just South Norfolk wanted, so we are seeing some of those. But in general, we've reviewed that and we're comfortable 45-55 is still appropriate.
So it's still comfortable. Okay,
Yes, I was going to say there's a slight irony in that the majority of the South Norfolk only posts, I think, are associated with our increased appetite for environmental projects or leisure projects. So if you're looking for the main differences, they'll almost all be in the environment or leisure budget lines.
Okay, that's helpful, thank you. Back to you, sir.
The next section report from paragraph 2.12 on is probably quite interesting area, because obviously this is where we've now had to start budgeting and planning for the rollout of food waste. So this is an additional pressure for this council, about £1.1 million. See, that's a significant cost. We do get money from the producer responsibility obligations to help offset some of that cost. We were hopeful that actually when the settlement was going to be announced, there might have been a specific grant for local authorities to help towards these costs. We haven't seen that. That's all been bundled into the main settlement. But this is one of the big pressures in our budgets for next year, funding that rollout of that service.
Sorry, Councillor Graham. I think they're doing that today, Lou.
All right. Yeah, on the food waste, has there been any consideration on the gate, a potential reduction in the gate or increase in the gate fee from the impact of the reverse vending machines, taking out the aluminium cans from the otherwise what would come through the processing centre?
I'm not an expert on waste, but sorry, that will be a factor. But I'm not certain when those reverse vending machines are actually coming in from. So is it next year or the following year? So I think there will be a longer term impact, but I'm not certain it's going to be an impact immediately. But I'm not an expert in that area.
Okay, that's as far as we've gone now. We're going to be operational there, but it's a good question, thank you.
Okay. Waste is obviously a big pressure area. The other area that we're seeing is the homelessness pressures. This is I think, a well-trodden sort of issue. We have invested as a council in purchasing our own stock of temporary accommodation, but we are still seeing that increase in demand. So I say the paper very much says actually there was 85 households in temporary accommodation, up from about 52 2 years ago. So we have actually included in the budget a potential increase in these costs up to £890,000 next year for the spot purchase temporary accommodation cost. Obviously there is work going on to look at our strategy to reduce that, but that's considered prudent to make sure we do budget for hopefully the worst case scenario on these.
Yeah, I'd just say I think the council should be commended for its work in that area.
Another area of change within the budget is regarding our support to businesses. In the current year, we were getting a UK Shared Prosperity Fund, which we were using to support businesses, particularly through the business building programme. That's been abolished. So there was a decision for Cabinet whether to stop the programme or bring it into their main budget. And the decision has been to actually continue to support this scheme, to support with economic growth in the district. So that's been built into the budget, but it's no longer obviously funded from the government grant because that has been removed. Yeah. Another key change with regard to CAF. This has been a very popular fund, been oversubscribed in recent years, and actually in most years there's been an increase to the CAF fund during the year to actually support more projects. And this year the proposal is from Cabinet is to increase that budget from £50,000 to £500,000. So you can see that's a significant increase in that area.
Thank you. I'll bring Daniel in there, thank you.
Thank you very much, Chair. I just thought for some additional context when we get to the capital programme, this is best seen as a pair with the new community facilities grant. As you'll see at other points in the Cabinet papers, we've significantly tightened the rules around the CAF fund at the same time. The idea being that the community facilities grant will now be there for repairs to existing facilities, but we would like the CAF fund to be very much geared to delivering new things for communities.
Yep, excellent. Thank you very much. Back to you, Rodney.
Again, just the next section was mentioned about the leisure services, continue to support that. And indeed, in the capital programme, we'll need to see quite a few areas where we're looking to enhance and develop the overall leisure service. Our old friend South Norfolk House, obviously, we're still sort of own that asset. we're now expecting the running cost of that building until sold is obviously significantly less than it has been because the building has been demolished. So very much the next section of the report just tries to bring in some of the other areas, because obviously not just the cost of service, you've got your interest costs, and also any set aside for reserves is the next section. And it's worth pointing out that the Cabinet is still proposing to actually put some money aside from revenue budget to support the capital programme each year, which helps make sure actually you can afford to support that capital programme going forward. So that's very much the section. Section 3 is very much about the local government finance settlement. So we did get the announcement back on the 17th of December of provisional settlement. You may be aware we get announcements twice, so it's actually the provisional settlement, and that's where we then actually get the opportunity to go back and ask questions, and then they give us a final settlement. At the time of writing these papers, we only had the provisional settlement, so that's what these papers have been based on. And as I already mentioned, this was the first year we've had a 3-year settlement for probably 10 years, which is something that actually local authorities have been asking for a number of years, so it's pleasing to see that, which does give the opportunity to plan a bit more in advance. This has also been a year of significant change to the funding formula. So basically the government has taken the opportunity to review the funding formula and change how money is allocated between authorities. And that's had a significant shift away from authorities such as ourselves and to authorities which are seen with higher levels of deprivation. And I think we've covered this in that medium-term paper that was brought to this Cabinet previously on this. But it's worth reiterating that this is a significant change. Things like new homes bonus have now gone, business rates has been reset, so there's been significant changes. But probably here is probably worthwhile saying things have changed quite a lot since the provisional settlement. On Monday we received the final settlement, and as Richard says, we don't often see changes to the funding settlement. We might see a small change, but actually we were warned there could have been significant changes relating to how they worked out our business rates baseline. We were quite worried that that was going to impact us, another really negative impact on the amount of grant we're going to get. And indeed, as Richard says, the headline figures would have been an £812,000 in the amount of grant we would have received in 26-27, which would have been very late for us to know about that if they only told about us on Monday and then tried to sort of plan what do we do with this. Fortunately, I think at the last moment, the ministers agreed that actually it would be inappropriate to actually have big productions like that at the last minute, which is why they introduced this new adjustment support grant at the last moment that's come into the settlement. So although we're losing $812,000 from our general grants, we're getting a new adjustment support grant to fully compensate us. So in actual fact, there's been a lot of change, but the net effect is nothing for 26-27.
It's like a parachute payment.
It is. And this is costing the government, I think, about £160 million overall to support making sure we're not disadvantaged by this change.
Yeah, certainly overnight.
Yeah. The real issue, though, is this change to our business rates baseline is not just a one-off effect. It will reduce our grant in 27-28 and 28-9 by nearly 1.1 million, and there's been nothing from government to say that they'll do anything to offset or compensate for that change. So as for Monday, we are looking at being £2 million worse off in future years than we were expecting on Friday.
Can I just come in there so that support doesn't taper off in years 2 and 3 necessarily?
No, they've been quite clear at the moment. It's only a one-off grant. However, there is a lot of discussion, I'm sure, going on with this. And although we have got provisional figures for 27-28 and 28-29, you have to consult every year on a settlement, so it's not impossible that it might not change by then. But actually, the best information we've got at the moment is actually we need to be planning on potentially that £1 million cut in future years. I don't think that this fundamentally alters the basic budget papers that actually Cabinet agreed, because actually they do have a robust level of reserves, so it doesn't immediately say we've got a problem in future years, it's just going to make it more difficult. So I think the budget proposals as they stand that Cabinet agreed are still completely appropriate to go forward for full council. It doesn't need council to review, but that
Yeah, I was just going to elaborate on that a little bit. Whilst, like Rodney, I'm comfortable with the budget as it stands for this year, were the minded to decision to be postponed for any reason, I would not be comfortable using reserves to fund that £1 million gap over any significant period of time. So we'll be looking to fill that £1 million by the next financial year.
Thank you, Chair. Just wanted to ask a bit about business rates. I assume that obviously the business rates income depends on how many businesses we have running in the district. What sort of fluctuation is there in businesses closing, new ones coming in, and how do you sort of predict where the income is? I mean, every week we're hearing about businesses closing, whether it's business rates they can't afford or cost of staff or things like that. And I know new businesses do open, but is there are we looking at a worse position, like more closing than opening at the moment?
That's a good one, I think.
South Norfolk has actually done remarkably well on business rates income over the past few years. We have historically seen an increase, probably for the past 5, 6, 7 years, constantly the business rates income going up. And that's why we've actually been able to benefit from increased funding settlement, because we've had business rates growth and we keep a portion of that. So we're optimistic that actually there will still be business rates growth. We are seeing more businesses open in South Norfolk than closing or expanding. So actually it's a positive picture for this council.
Is that okay, Councillor? Yeah. Let's keep going, Rodney. It's really helpful. Thank you.
Okay. The next section is all about the business rates mechanism. So I think, don't want to overcomplicate this, but there was a benefit from actually going in with Norfolk County Council and other districts previously to pool our benefits from business rates growth. The whole system has now been reset, so actually for next year the decision been made not to try and put a new pool in place. We'll see how it goes, and then we might actually move forward in future years. So it's a note of a change in direction because the rules have changed on that.
No. Again, just a little bit of context. I should say, I did, in the capacity as leader of South Norfolk, offer to form a business rates pool this year. So it was not through a lack of will on the part of South Norfolk that pool was not being recreated. However, other partners were not so willing given the change in government formula.
Yeah, I think that's an important point. You can only form a pool if you have someone who wants to pool with you. So it was, I think South Norfolk was probably the most willing party to actually explore this of any of the councils, but there wasn't that appetite. Section 5 of the report just sets out the budget consultation. I think we agree that the response rate is disappointing, but we continue to try and sort of get a response by doing our publicity on Facebook and Twitter and things like that. And actually we did change the question slightly this year to try and get a slightly different focus, but the results are what they are. Fees and charges, these are the cabinet decisions to set the fees and charges, so very much to note they've continued the policy of increasing them in line with inflation by the RPI. And there's a couple of changes there for taxi licences and the standard information just for clarity on the garden waste bins.
Yeah, really helpful. Yeah. Do you want to go into the medium term?
Yeah, so the medium term strategy, obviously very much that graph from 7.2 was showing our funding with a flat line. Now from the finance settlement, you can put that orange line going down by £1 million in 27-28 and 28-29 because of the new settlement. But as the leader has said, the cabinet will be looking at seeing what they can do to actually deal with that over the next year.
Rather than relying on reserves. Yeah.
Yes.
Thank you. Start.
Yeah. Just notes very much again next year. The borrowing is going to be our existing borrowing 24.5 million. and no proposal to change that in the next year, but there may be a need longer term. And very much section sets about the reserves, section 8 reserves. Again, you can see a very healthy level of general fund balance over the next 2 years, which is why I'm comfortable to say actually the budget as proposed means that we will have significant reserves and more than sufficient reserves to continue for the foreseeable future, and actually got no concerns about the financial stability and sustainability of this council. And then next section is very much just about the council tax. Obviously, it works out how we calculate the council tax, shows that we're still seeing an increase in our tax base, the number of properties in the area, and just confirmed that the referendum limits for this council remain at that 3% or £5. So actually 3% would give you the ability to increase council tax by 5.25%, but the Cabinet has kept it at that standard £5. I think it's for simplicity, clarity, and follows the previous sort of.
What percent is £5 out of interest?
It's £5.25 it would be.
Oh, right.
So technically you would have headroom to put it up by another 25p. And I think it just mentions in the next section about the what the other councils are proposing to do. County is proposing a 4.998% increase, and we do know that the police now is putting their council tax up by £14.94. They had a maximum of £15 and they've gone 6p below that. The parish obviously free to set their own sort of council tax, and we're just getting the final parish notifications in, which will be listed on the council papers next week. Yeah, and then no changes to special expenses, and my advice is there. And then obviously the section on the Silfield, section 106, as the monitoring officer said, that was a decision related specifically to Cabinet, so it's not relevant for today's discussion.
Okay, that's really helpful, Rodney. Thanks for taking the time to do that. Right, over to the committee for questions or comments, please. Councillor Overton, thank you.
On page 30, can I just ask or get clarification on 3G pitch renewal reserves, Ketts Park tennis court renewals, what was the other one on there, and from leisure centre recovery reserves. I'm just interested in 3G reserves, what that's all about.
Thanks, Rodney.
So the Ketts Park Tennis and 3G Pitch Reserve, I believe we had funding for them to help develop them, supporting with another body, and part of the requirement of that is you set aside money each year in order to fund future replacements. So this is very much setting aside a bit of money every year, so when they do need replacing in the future, there's some money set aside to help towards that cost. With regard to the £250,000 from the Leisure Centre Recovery Reserve, this came from a few years ago where actually we said post-COVID there's a need to support the leisure service, and money was put aside each year to actually make sure there's some money to actually offset the cost of running the leisure service, and that's just a continuation of that sort of agreement.
Do you want to follow up there, John?
Thanks, Rodney. And the other thing, which is I think might not be relevant to the budget, I just wondered what the cost was on the demolition for South Norfolk House.
Yeah.
£350,000 was the cost of that demolition. It's slightly under. I think we budgeted 370 and it came in at 350.
Okay, happy with that, sir. Councillor Emma.
Thank you. I just thought, going back to the 3G pitch reserve, that's a principle we're trying to extend to some of our own grants as well at the moment. You'll see in the details of the new CAF rules that higher scoring is awarded to those projects that demonstrate a plan for ongoing maintenance and replacement.
Okay, that's really helpful. Thank you. Councillor Cross.
Thank you, Chair. Just looking at the, which page is it? Sorry, 32, council tax calculations. So we're obviously looking at a £5 increase this year. On that chart, it's adding £5 for subsequent years. Is that something that we will have to consider now, or will consider that in future years. But that is where you're looking at recouping some of our funding from. Is it £5 every year?
Yeah.
Daniel,
Yeah, I think so. Thank you.
You have to make an assumption in a medium-term financial strategy, and that's the assumption in there is £5 increase. It doesn't mean you have to do it. It just is an assumption for the medium-term financial strategy. So it's not the cabinet saying this is what's going to happen. This is just an assumption at the moment.
Hear from our leader on that.
Yes, it's a forecast in line. We have had a policy for some time now of clear £5 increases per annum. Obviously, it would be disingenuous at the second to say that isn't a choice. This year it is a choice. We could afford to not add that £5 in. However, it's the cumulative impact each year of not building that into the baseline, given what we've already discussed with the £1 million loss coming in next year. I think we would be setting ourselves up for a situation where the collective impact of continuous freezes may catch up with us. Obviously, we have, when we've made structural changes to our cost base, like the move from South Norfolk House to here, we did take advantage of that at the time to choose to make a freezing council tax. But I would only want to deviate significantly from that when we had strong underlying savings built in that we could depend upon to fund those council tax increases. At the second, £5 remains in line and slightly below the rate of inflation, so it is in fact a real terms cut.
Okay, very clear answer. Thank you, sir. Okay with that? Councillor Easter.
Carrying on with that theme, are we seeing a steady decrease in the number of homes that are actually paying council tax, which means we'll end up with a deficit anyway?
No, our collection rates are holding up well. We are actually seeing still that very high performing compared to most councils nationally. I think we are seeing a lot of support being given from the help hub and people like that to make sure people are claiming the benefits they're entitled to. But actually at the moment our collection rates are holding up well.
Okay, good. You okay with that? Thank you. Any other comments or questions? Councillor Graham.
Yeah, if I've got my pluses and minuses the right way around, on the investment income, page 29, Treasury Management and Big Sky Development are forecast to bring in less money, but Big Sky Property has gone from 73 to a nice round 200. So how is that forecast now realistic? Is that a huge increase?
Yeah, thank you.
The Big Sky Property income has gone up because actually there's been more properties, as the settlement properties have gone to Big Sky. So there is more properties within Big Sky Property Management they're managing, and actually therefore we've got bigger loan to them. So that is a known figure based on the loans being given to Big Sky Property Management. The Big Sky Property Development one is a more difficult one to forecast. As you'll be aware, Council agreed a new revolving credit facility for Big Sky Property Development. Therefore, it will depend on how much they call down from that reserve. So we've tried to make the best estimate based on the business plan for Big Sky Development, and actually that number of 1.2 million is consistent with the Big Sky Development business plan that's coming forward for approval.
Okay, thank you. Still with you, Trevor?
This year there was a £70,000 handed out for nature conservation projects, which I believe was very well received and oversubscribed. So is there flexibility in the budget for next year for a similar scheme?
Yes, but that would come from the existing environmental reserve. What we put aside several years ago, some monies into a pot specifically for environmental projects. There still remains scope within that reserve to draw down.
Obviously, the revenue budget includes the increase from 50 to 450 for the CAF fund. Yeah. I didn't hear and see an estimate of the change in members' allowance, because I think that has proposed to go up as well.
It is in there, but it's buried. Rodney, whereabouts is it?
Is it in an appendix?
Is Appendix B the budget movements where there is a list of the, what we call the growth items, the additional things being put in? And just for clarity, the CAF one is going from 50 to 500, so it's an increase of 450, not a 450 in total.
To
Yeah.
let you off the hook, Terry.
But
The Cabinet had a hunt for that for the doubling of the Members' Ward grant last week as well. So
okay, so
Okay, thank you. Still with you, Terry?
well, it's just to respond, which says that in this budget proposal, it's now at £2,000. Is that correct? Yes. Thank you.
Okay, so that's really helpful actually and really clear. Any other comments or questions? We'll come back again at the end if you want to. Catherine, please do, yeah.
Sorry, just one more thing. LGR, obviously, is a big factor to take into account. It just concerns me that the language used around LGR is minded to and may happen, and I'm getting increasingly concerned about, I know we can't predict what the government's going to do, but are we confident that it's going to go ahead? It just concerns me, the language that's constantly thrown out there, with it just seems to be becoming more and more vague every day.
Yeah, there was a bit of that. The Councillor Elmer, you okay to answer that? Thank you.
no. You'll note. Obviously, we have to make some provision based on what the government has stated its intentions to be. But you'll note from my language around the council tax increases, it is still very much on my mind that South Norfolk Council could continue to be here significantly past 28-29.
Little bombshell moment there. Okay, thank you very much. Good question, Catherine. Do you want to come in there, Rodney?
Yeah, and also I think there's still the expectation it is like to happen, but from my point of view, we need to be budgeting on the known facts at the moment. So actually the known fact at the moment is there is no decision. So we need to be setting our budgets so that we actually make sure we are sustainable and solvent, whatever happens. We can't just say we're not going to exist in 2 years' time and therefore don't worry about things. We need to be thinking about the residents for the long term. The services are still going to be provided in whatever format. The bins will still need to be collected. All the services will still need to be provided. So we need to be budgeting on that long term basis.
Okay. Very frank here. We're good. I appreciate that's good question, good answers. Yeah, Daniel, do you want? I'll bring Daniel back, Catherine, first, and get back to you.
I will just add a little bit of the more political dimension to Rodney's comments there. Rodney is absolutely correct from a revenue basis. However, when we get onto the capital programme, as council will know, and I have made this point many times, money that has been collected from the residents of South Norfolk and accumulated from the residents of South Norfolk with the intent it would be spent on the residents of South Norfolk, I believe we have a moral duty to ensure is spent in that manner prior to a dissolution date of South Norfolk.
Yeah, I think we'd all agree with that. Thank you. Back with you, Councillor Cross.
I just wanted to add that I have every confidence in our finance team to look after the budgets extremely well, and yeah, I'm very glad we have Rodney on our team. That's all I have to add on that.
I think we'd all echo that. Thanks for saying it there. Anything else from the committee members? We'll come back round at the end. Jim or Graham, do you want to come in there?
Yeah, I think Councillor Elmer's part answered this question already, but in the light of the recent discussions, you know, to all intents and purposes, an outsider looking at this, both the revenue budget and the proposals for more capital spend, the medium-term outlook, which is to have much lower reserves going forward, it could be argued, I think, that we are simply spending down in an irresponsible fashion to clear out the bank accounts before the dissolution of this organisation. And I just wonder how we as a council would address that question.
No, that's fine. I think there's two parts there. The spending down, one, whether it's irresponsible or not, two. So I think address it like that. But Daniel, do you want to come in there? Thanks, Jim.
Yes, I think splitting it into two parts is quite handy because I think there is a very big difference between revenue and capital here. It is absolutely not my intention that we would be operating a revenue deficit for any prolonged period of time, and I think I've already addressed that in the comments about the 1.1 million deficit that would appear next year. I believe that would be irresponsible. In terms of capital, however, as I've already alluded to, if we believe this organisation isn't going to exist, I would argue it is our moral duty to ensure that our residents' money is invested in our residents before that time period ends. And I think that is the responsible thing to do. I believe that is the purpose to which the money was entrusted to us.
Yeah, I think that's a clear and emphatic answer. Still with you, Jim? If you want to come back.
Yeah, thank you very much. I'd like to ask about just the funding of LGR transition, which is still, I think, the expected course. The £350,000 contributed to the LGR reserve seems, potentially a very low figure, almost an arbitrary figure, in the light of what I hope is a pan-Norfolk projected cost of 30 to 50 million.
Yeah, comment on that would be good. Thank you. Rodney, do you want to come in? Or Daniel? I don't either. We'll go for Daniel first, thank you.
There is a pan-Norfolk cost. The exact programmes are being worked up by a cross-Norfolk board as we speak. Obviously, the actual cost of implementation will take place over a multi-year horizon. Within that, one would expect the county council to end up taking a disproportionate amount of the overall implementation and transition cost, given it currently makes up 83% of the overall services. Yeah. As it stands today, the council is right that 350,000 is something of an arbitrary figure because we are dealing in the world of unknowns. But yes, I think yes, it is an arbitrary figure, and yes, it will also eventually be a multi-year cross-Norfolk cost.
Okay, I'll bring Rodney and then back to you, sir.
And the report that came to Cabinet in January did actually add some money to the reserve, so it's not just money in the revenue budget. You do have a reserve sitting at £668,000 for LGR costs. So if you add that on to that 350,000, there is best part of £1 million available in the council's budgets to support LGR, which is as good as any other district I think is putting aside at this stage for LGR.
And if the minded two
Okay,
decision,
thank you. Do you want to come in there, Daniel?
if the minded two decision is laid, will be the first port of call for where we plug the £1 million gap next year.
Thank you. Jim, with you still?
Thank you. On the subject of the £1 million potential gap for next year, this committee might like to suggest that a paper is produced perhaps a bit earlier than normal in the budget cycle on options for reducing the gap before we get into the sort of, the normal budget cycle of January to March. Also being conscious that perhaps we'll be in a different situation come that time, but I think it's something that this committee might want to look at.
Okay,
so
let's come across there that only committee members can formulate recommendations, but I guess you're musing about it, aren't you?
I'm musing about a recommendation that the committee might like to give, precisely, sir.
Okay, do you want...
Yes.
Thank you, Chair. I think all members know and realise that we start this budget process incredibly early, really, from about September, and I think that would certainly still be the case, so that members get their opportunity to input, make suggestions, and obviously be aware of the budget process as it emerges.
Okay, final time with you, Councillor Webber, if you want to come back.
Okay, I'll have to put two questions into one, but they are linked. Really, I'd like Rodney to outline what he sees as the principal risks to next year's revenue budget. And then linked to what I see as one of the potential risks, or not, is the question of the large loan, very large loan, outstanding at present to Big Sky Development in accordance with agreed lending strategy, etc., etc. With the outlook for the housing market, should we say at best uncertain,
and with the danger of external factors beyond anyone's control hitting, the world or the UK economy, if there was a big downturn in the housing market, I foresee a need to potentially write down our loan to Big Sky Developments because the options for renegotiating it are now getting very limited. And how would that hit both our revenue account and our general reserves?
Okay, that's good actually. So general risks and then focusing inevitably on the Big Sky loan. Well, thank you.
I think the big risks very much for the finance of the council is homelessness. We've seen that as a significant issue and money's been set aside for that, but there is a upwards projection on that. It's always the economy, because obviously things like planning fees, building control fees, land charge income, and indeed demand on our services. Actually, if there's a recession, you see demand increasing for financial support, hardship support, and demand on the help hub. So I think those are ones. I think LGR is a big one as well, and indeed that's just been put into the strategic risk register again. I think again for the LGR because that's a big risk. And the other one I think you say is the investment income, be it just from a normal treasury management or indeed from loans to our companies. And there's a risk about interest rates falling, isn't there? So it's not just about the returns of Big Sky. Our main treasury management, if interest rates were to fall down again to a lot lower than predicted, again would see a reduction in that. And that's one of the reasons why I think the council's invested through Big Sky. So it's not just got all its money in treasury management investments, it's got an alternative way, and actually Big Sky tends to pay a better return than just putting it into treasury management. But as you say, the construction industry has been challenging. Big Sky is in a challenging environment, and that's why there's a lot of oversight through the board that's looking at that now. I think there's got a lot more governance on that, but those assets are still in rock solid buildings, aren't they? And actually, unless you see a big property crash, then actually you've still got an asset, be it a building or a loan to Big Sky. So although it's a big number, I think that overall net impact is less because it actually is in a solid asset.
Okay, Jim, do you want to come back on just those two specific questions, please?
Well, on that last point, I think, I've spent quite a lot of my working career on investment, and Norwich Union Viva, as it was in particular, used to have big property investments. One of the things I learned was that while they're relatively rare, significant falls in the value of properties are rather more frequent than many people believe, and when they occur, they are very painful. And I don't think Rodney really addressed the question that it's not difficult to come up with a scenario in which house prices fall by even 20% over 12 months. It's not difficult to come up with that scenario. Hopefully it won't happen. But what would be the implications of that for South Norfolk Council?
Okay, can we re-put that to you, Rodney? Yes, please, thank you.
I think to reassure Councillor Webber, obviously there's two sides to Big Sky. There's the development side, but there's also the property management side. And, there was always the ability to move those or sell those houses from Big Sky Developments into Big Sky Property Management. What I would reassure is at the moment is sales are continuing at the Big Sky site at St Giles Park, but we also know that rental rates in that area are also very high as well. So I don't think there's any risk of writing off those loans because we could literally transfer them into the fixed assets and move them over into Big Sky Property Management. That is always an option should the council wish to look at that.
Okay, Jim, have you got any burning final response to that, or are you happy with that?
I think my question isn't being answered. I think I need to encourage one or two of my colleagues to call this issue into scrutiny so we get a proper paper that addresses the issue. Okay,
I'm satisfied that the question was answered fully, but obviously that route exists for all people. Okay, Graham, do you want to come in there? Okay, right, let's go back to the committee for one final look at comments and questions, if there are any. Are we all happy to move to recommendations? Okay, well, pretty straightforward. To endorse the Cabinet's recommendations. So are we all okay for that, show of hands? Yeah, thank you. I think we'll do a little break there, shall we? Do a 5-minute